Imagine if you could unlock the value of your house in retirement without actually selling it. This is precisely what a reverse mortgage does in India. A reverse mortgage is, as the name suggests, taking a loan from a bank, and that loan is paid off after you and your spouse both pass away. It is paid off by your heirs either by selling the house, or if they have other savings, then from that, after which they can inherit the property. But you, as the borrower, you don't have to pay back the loan until you don't have to pay the loan at all in your lifetime. So, what are the pros and cons of reverse mortgages, and why has it not taken off in India in a big way? Why haven't you heard about it? So, the big pro obviously is it unlocks the value of your house, which is otherwise an illiquid asset. Number two, the payments under reverse mortgage are tax-free. They're tax-free income. There is interest that is charged on the reverse mortgage, but as I said, you don't have to pay it off in EMIs. You don't have to pay it off at all in your lifetime or the lifetime of your spouse. The cons are that one is that properties older than 40 years are not eligible, so ancestral properties are not eligible. Secondly, most banks cap the value of this loan, and it's mostly nationalized banks that offer it at 1 crore. So if your property is valued well in excess of 1 crore, then it makes no sense for you to tie up your property into a loan that is less than 1 crore, because the bank doesn't lend the entire value of the house. The bank lends money which is around 80% of the value of the house, and there's also a cap of 1 crore. So that's the second drawback, this 1 crore limit. The third drawback, of course, is that you might want to actually leave an inheritance for your children, which doesn't involve them having to pay back a loan, a bank loan. And the reason why it hasn't really taken off in India is because banks haven't been incentivized to go out there and sell it much. So nationalized banks do offer it. It is there on their websites. You can go and ask, and if you pursue it, you can actually get a reverse mortgage loan. But you won't hear them talk about it. So what is the verdict? Should you go for it or should you not? I think it depends on whether you fall into that subset of people who, number one, have a clear title to their house, who actually live in their house, who need the money, who need a tax-free stream of income, who don't have a lot of other savings, who don't have kids or whose kids are financially independent, who are not expecting an inheritance, whose property is not more than 40 years old. And remember, the term of the loan is 20 years max. So really, you have to plan out your retirement well, considering that. The amount of the loan also gets fixed. So inflation will cause your expenses to rise even after retirement, but your loan amount is fixed. So you have to supplement it with other savings, other investments. But if you fall within this subset, and I'm sure lots of middle class Indians do, then do have a look at it. To know more about this, please read our story in Mint. Thank you.